A simple analysis of the overall market trend is much easier made by the graphics of candlesticks, based upon the fact that today the Dow was up 23 points on the day, still above the T-line. The NASDAQ was down 10 points on the day, but still above the T-line. The fact that one index was up and the other index was down clearly illustrates there's no consensus in the market trend, so there's really no change of investor sentiment. And the bottom line is, as long as the indexes continue to trade above the T-line, the uptrend remains in progress. Knowing what to expect after a observable price pattern, notice the big fry pan bottom in PDFS, our recommendation today. We also have a slow curve fry pan bottom breakout through this resistance level. Although it opened positive and traded lower on Thursday, Friday told us that this is what we call the message signal, that even though it was trading lower after where it opened, the message was that it gapped up big time and there was profit taking. Makes this a very simple entry strategy. We wait to see when the profit taking is over and the uptrend will continue. And the reason we expect the uptrend to continue is based upon the message that there is strong buying coming in, profit taking. Now we're waiting for the profit taking to end so that the uptrend will continue based upon that strong buying signal. Candlestick patterns are very easy to recognize. The fry pan bottom looks like a big fry pan bottom. Then we have the J-hook pattern, which is usually the result after a fry pan bottom, because the expected result coming out of a fry pan bottom is a very strong price move. The prerequisite for a J-hook pattern is a strong price move. So we call this the classic pattern, which is fry pan bottom, strong price move, profit taking, and then the J-hook pattern, which had the prerequisite of the strong price move in combination with the fry pan bottom. We also know when the optimal time to buy in certain situations. For example, you can see the dojis that occurred right here on the T-line and starting back up. You can also see down here that we had an inverted hammer right off the 50-day moving average. We know there's a very simple statistic that if it opens positive after an inverted hammer, especially in the oversold area, the probabilities are probably 95% or greater that you're going to be in an uptrend. Knowing these simple rules, and candlestick signals work just as well on the downside. As you can see, the 50-day moving average is acting as a resistance level here on ENDP, and there was a failure with a sell signal right here at the 50. Close below the T-line, close below the 200 with stochastics heading down. More than likely, this has the prospects of coming back to test this level or even possibly going lower, testing the lower level. The advantage that we have with candlestick analysis is we can see graphically what's happening at important support and resistance levels, giving you that much more probabilities that that's where a reversal has occurred. That'll be it. We'll see you in the chat rooms.